market's not perfect and it's going to do different things all the time. So, you know, we can anticipate as much as we want, we can forecast, we can plan, but at the end of the day, we need to be fluid with price and trade what it's doing, and using pretty much the most simplistic framework we can possibly trade, which is basically if lows are breaking and that's to continue, we're likely to pull back into supply and then continue moving to the downside. You know, this is in essence the most oversimplification of the phantom strategy possible. This is the expectation that we look for. It's been rooted in the content since day one, but this we just take further and further in our simplicity's sake, that if this low breaks, it's going to form some level of supply in this leg, whether that's the extreme or decisional levels that exist along the way. If that momentum, that selling pressure is going to continue, price is going to return back to some sort of supply level or price area where large orders were entered into the market. Once we tap into that, if that's going to remain true, we're going to see price continue moving to the downside, breaking another low. And this is why when we talk about the front leg from the 4-hour perspective, if you're selling from 4-hour supply, where are you targeting? The most recent low that created this pullback. Why? Because this is a very high probability that price is likely to return to this, because even if price returns here, you'll be able to complete your trade. And even if price does this, and then what is this doing? Okay, we broke a high. How do we confirm that anything's happening there? Price returns to demand and then continues to break the high. And then we just play this so on and so forth. And that's exactly the strategy summarized very quickly. Yeah, we can start to add in verbiage and things like that. Okay, so we're going to confirm that this is a supply zone. Our last point of demand would be the extreme here. The last point of demand has failed. Therefore, this is a valid zone. Price trades up. How do we confirm this if we're trading on a lower time frame? Well, if we just move this over here, we are looking for the last point of demand to either give a reaction and then fail, forming a flip zone, or we're waiting for the last point of demand to fail, and then that creates a new supply zone, whether it's the extreme or a decisional level. Price then comes into this supply level, and then this is where we say to ourselves, am I confident in this zone? If I am, I can trade this zone directly depending on what time frame it is. So let's say that this is the 4-hour, this is the 15-minute or the 5-minute. From there, the best thing to probably do is go down to the 1 minute for your execution. And as I always say, the best thing to wait for is to trade a flip from that perspective. And you've confirmed that time frame. And then this would be, you know, a confirmation entry of that, because you're confirming this 4-hour zone using 5-minute or 15-minute order flow shift, and then actually confirming it once more on the 1 minute. Now, if you don't believe that this zone is high quality, you're not overly confident in it, the 1 minute confirmation helps, but maybe what you want to see is price trade into this level, holds, which would be our first level of respect, our floor. Then from there, what are we going to do? We're going to look for our last point of demand, which could be this extreme. It could even just be a decisional level. Price causes that last point of demand to fail. From there, it creates a new zone. Then we can look to trade that zone with the anticipation that this low is going to fail, and it's under the premise of this happening. So we're executing on this zone in the 4-hour. We're under the assumption that this low is going to fail, and we're able to do this because we've seen the last point of demand fail. We're wary of this last point of, or this extreme last point of demand, but once price, you know, fails off of that, happy days. But that in essence is what we trade and how we trade it. And it really doesn't get much more simplistic than that. Now, it's not easy, but it is simple to understand once you kind of get all the moving parts in. What we're doing on the 4 hours, we're just assessing the directional flow. Are we breaking lows and respecting supply, or are we breaking highs and respecting demand? If that's the case, when price returns to these 4-hour demand zones or supply zones or demand zones, then we can start to use our mid time frame to basically do the same thing, find tradable zones, and then look for basically the same thing. What do we do to assess order flow on the lower time frame? The exact same thing. Are highs being broken and demand holding? Okay, demand's in control. Are lows breaking and supply is holding? All right, supply is in control. Then how do we look for entries? We look for the exact same thing inside of these zones, or we can look for continuations in the leg if that makes sense. And all we're looking for here would be a chain, for instance. And what is this? The chain is just a fractal version of what's happening here on the higher time frame. So you're confirming it from the highest time frame, the 4 hour, all the way down to your execution time frame, the 1 minute. This is what gives us the ability to take trades. This is what gives us the ability to be confident in the trades that we're taking, because we're confirming them from the highest time frame. We already have confirmation from the 4 hour. So if we're looking for, say we're looking for shorts today, and that kind of makes some sense. We're reacting to supply, why we're seeing low fail. Supply is likely holding. Of course, if we were looking at this, we'd probably want to see something like this and then trade the next one. That gives us true confirmation, but we don't necessarily have to wait for that. We can be a little bit more aggressive, at least knowing that we're going to trade to this point. So if we're looking for sells here, then what are we looking for on the 15 minute? We're looking for price to trade into that 4 hour zone and do the exact same thing. See the last point of demand fail, which will create a supply zone, whether it's at the extreme or the decisional. How do we know which point is going to hold? Well, what we want to see is price trade into that zone, have another last point of demand. If that last point of demand holds, it's a really good indication. Maybe we're not fully confident with the decisional level because the extreme exists. Well, then what do? We wait for a first level of respect on that. Last point of demand fails once more. Boom, we have confirmed order flow. We can look to take entries on that. Again, if this is the 15 minute, we can then use this zone to go to the 1 minute and do the exact same thing. Maybe this doesn't cause the last point of demand to fail. We just get that, so we don't take a trade. Come into this, okay, and then maybe the last point of demand is down here because there's just a straight push. We get that, okay, great. We have an entry zone that we can now take an entry on and trade, all based on this idea, and we've confirmed it already, and we have confidence in trading these zones. Why? Because we're trading with the 4 hour order flow in mind, and we've confirmed it on the mid time frame and then confirmed it on the 1 minute. It's a series of confirmations to the point where you should have confirmation and confidence to trade these levels if everything's met. And if you've watched any of my end of day markups videos, which reminds me I have yesterday's to catch up on, you'll know that what I look for in confirmations for entry are fairly loose. A lot of people are like, is it really that simple? You just look for, a demand chain, or you wait for a supply reaction that creates a flip and then trade the flip. Yes, it is. Why? Because I've confirmed everything from the higher time frame and the mid time frame to get to that 1 minute entry. So you don't need a ton of confirmations. And in many ways, the best trades have the least amount of confirmations from that perspective, because it's the overall framework, that higher time frame analysis, that gets you to that result. It's not because on the 1 minute it swept liquidity, it was a flip, it was this, it was that. Those things certainly help, but being able to build it from the higher time frame and execute it down to the lower time frame using that series of confirmation, that's what's ultimately going to give you the best trade ideas. We're reacting to supply. We're starting to shift on the mid time frame. Now the question is the 4 hour truly going to shift and break this low to confirm that, this series of PA where this low has broken is making sense? Or are we more trapped in this where we've reacted to NFP, we're coming down, we're taking out internal range liquidity to come to some apex point and move to the upside? That we don't know. And that's where order flow becomes a little bit muddy on the mid time frame, but we just need to trade accordingly to that. And if we're looking for shorts, we have all the confirmation we need. If we look at what price is reacting off of currently, you can see that we are just barely reacting off of this demand zone. We've just touched it ever so slightly. And what we can see is it's been enough impactful where we've potentially swept this area. How will we know if this is a sweep? Well, then what we do is wait for price to break this high. Then we have demand. Does demand get respected and move to the upside? Then if it does, yes, that was a sweep. And look at that. I've used that same concept we just talked about on the higher time frame. Why am I drawing it that way? The same concept that we were just talking about on the 4 hour to confirm trend, to confirm this sweep, if that's the case. Why? Because that's the simplicity of the strategy in which we're trading. Where really ultimately what we're doing is looking for highs and lows to be broken and then apply order flow understanding and concepts to that to understand what's happening next. So if we are looking for longs from here, the first thing you want to see is this to start to fail. Then you can start to do your confirmation process lower. But what you would say in the back of your mind, you know what? This particular zone and trade idea is not in line with the 4 hour currently. If anything, looking for sells in its current state makes more sense to the 4 hour because of how we're looking at the 4 hour. But it doesn't necessarily mean that one idea is wrong over the other. It's just you start to then say, do I have more confirmation to trade short, or do I have more confirmation to trade long? The problem is most people, and it's easy to do, get lost in the mid time frame and only trade what they see on the mid time frame and don't factor in the higher time frame. And of course, you know, if we factor in this higher time frame, it's a little bit confusing to be, you know, trying to navigate right now. You know, we broke into the upside, we're starting to break to the downside, but we're still holding demand. We're just came down to a lower point. You know, if this low failed to take out this high, what was the reason? Was it because it's forming this supply chain? Or was it being used as liquidity to come down into demand to come up? We have a supply chain. This supply chain hasn't really done anything just yet. So are we just building chain liquidity to move to the upside? This is the question that we need to figure out at some stage. And, you know, we just need to wait for more data. That said, we can take trades if we understand our order flow concepts, and then we stack our confluences. So if we know that on the 15 minute, we're looking to maybe take some longs from this zone because we like this zone, you know, what does this zone have going for it? Pretty much nothing. If we're being entirely honest, we could maybe argue that it's part of a demand chain. And then we could argue that the demand chain originated from a flip. So, okay, it's got some qualities to it. You know, the zone itself that we're looking to trade, like if we just drew this out very broadly, this is in essence what we're trading, which is what's conveyed here, but, you know, more visually speaking. But if that's the case and you're looking for the bullish bias, and then you're kind of factoring in the fact that we are super bullish, you know, overall expectational order flow is suggesting that demand should at some point take control. And maybe this is a good spot to do. This is when we say, okay, like I said, is this a sweep or is this a break to the downside? How can we confirm that? Well, we need to see this high go. We need to see demand holds. And then we can start to do that lower time frame process where we start to look for a shift in order flow. And then we can take our entry if that presents itself. That series of confirmations is what's going to keep us out of a lot of trouble, even if our idea is incorrect. And on the flip side, of course, you know, we could move to the upside, switch bullish. Then we start to look at these points as, you know, solid supply points that then go in line with the overall 4 hour idea of the fact that price is potentially looking to target this low or even just the extreme from, you know, this new front leg that is likely forming that's reacting off of this point. You know, this supply zone is what put us here. So in theory, we could just be doing that as we talked about on the 4 hour. So if that's the case, then we map up our 15 minute zones and say, okay, we have something here and here. When price reaches here, what am I looking for? You know, we have these zones. So on the 15 minute, it might be prudent to go to the 5 minute and then look at something like this into that 15 minute zone, identify the last point of demand. That last point of demand fails. This creates our first level of supply. Maybe we have a decisional level as well because it's a flip or something. Can we trade either one of them? We totally can. When price comes up to it, what are we looking for on the 1 minute? We're looking for something like this, a flip. If we get that, great opportunity to enter. Or we're looking for, if we don't get a reaction, we want to start to see supply hold, and then we can take an entry there. And again, what is this? This is exactly what we talked about on the higher time frame. This is in essence, but if we don't get either of these things here, then we don't trade the decisional. Then price comes up to here, and then what do we look for? We look for price to come back in. Do we get a demand reaction, then cause that failure? Okay, then we have an entry. Don't get that, okay. Wait for that last point of demand to fail, supply to hold, last point of demand to fail once more, supply to hold, that's our entry. Again, what is that? That's the 4 hour model that I've been talking about. That's how we confirm levels. That's how we make trading super mechanical because we're following a rule-based strategy. You know, just looking for few key things, but those few key things are what we look for on all time frames. And when we have the alignment of that on the 4 hour, the 15 minute, the 5 minute, the 1 minute, we have the framework of an incredible and powerful trade idea if all of those things hold true. So, you know, if we do break this high, I'm going to be mindful of if we react to this supply. If we don't and we hold this, I might preemptively look for for buys there. If we come up into here, I'll also assess order flow for sells. I'm a little bit on the mind of both right now. So, I'm just waiting for that. As we can see on the 5 minute, the last point of supply has failed. We've broken that last point of supply. We've held demand. So in theory, we could even argue the last point of supply has failed here. So in essence, this could be an entry opportunity to trade long in anticipation of the 15-minute also starting to complete that. Again, from a 15-minute perspective, I'd want to see this high break realistically. But on the 5 minute, we can already see that that's failed. And that's why, it does make sense for people to use wicks as their last point of supply. The biggest thing is if you're using a 15-minute last point of supply wick, you're going to want to go down to a lower time frame to confirm that that last point of supply actually makes sense. In this case, it does, so that's okay. And as we can see, the last point of supply has failed. We have a demand level that holds, last point of supply here. The only thing that's not great about this is, while we do have that last point of supply failure, it creates a flip, and this could be an area to look to enter, and that's where we could look on the 1 minute for our confirmations. We should keep in the back of our mind that we are respecting, as it stands right now, the extreme supply area. So maybe this isn't the greatest particular area to look for a trade, because what we can see now is we've broken a low. We could just come back into supply and then continue to do this. And again, what is this? This is the same idea that that I talked about on the 4 hour, to talk about the 4 hour, the 15-minute entry confirmations. It all comes full cycle back to that.